Oh, I just got paid. Did you know that in 2021, stock market gains added over $3 trillion of wealth to shareholders? $3 trillion! To put this into perspective, the US population comes to around 333 million people. If every single person in the US was invested in the stock market and all gains were equal, every person would have gained over $9,000 just by participating in the stock market. If you're not taking part of this wealth building train, you're missing out big time. What's going on, guys? Welcome back to another video. My name is Paul and this is Masterpiece Finance. In this video, I want to go over two realistic and applicable ways you can make money in the stock market in 2022. No, I'm not going to mention the next penny stock that rises 400%. These two methods that I'll be talking about are practical for every investor, from beginner to expert. The first way you can make money in the stock market is through capital appreciation. Simply put, capital appreciation can be understood as the rise of a price of an investment. Let's say you bought a share of Apple for $100, you held it for 6 months, and that share of Apple increased in price to $200. Your capital appreciation will be $100, aka the difference between what you paid and what the stock is currently worth. But of course, capital appreciation doesn't mean you've actually earned the money yet. You would have to sell your Apple stock in order to lock in your profit. This would be called capital gains. A capital gain can be simply defined as profits from selling your investments. The second method is to buy and hold dividend-paying stocks and ETFs. This second method is pretty much the easiest way to make passive income through the stock market. All you would have to do is buy shares of a stock or an ETF that has a dividend payout and wait for the money to roll into your account. Dividend payouts differ depending on the company or the ETF, so you could be paid monthly, quarterly, or yearly. It's that simple. In simple terms, a dividend can be defined as a payment you receive from companies and their profits for being a shareholder in that company. Let me give you a real-world example. Let's say I am the owner of a company and you decide to invest in my company's stock. Let's say my company had $10,000 in revenue last quarter. After taking out all my expenses, I have around $5,000 left in profit. I now have $5,000 to reward you, my shareholders, for buying and holding my company's stock. This $5,000 will be divided among every single shareholder in my company. The more shares you hold in my company, the more dividends you receive. The ultimate goal with dividend investing is investing more and more money consistently, so the amount of dividend payout you receive becomes higher and higher. Fun fact, did you know Warren Buffett, one of the world's richest billionaires, receives around $3.8 billion in dividends annually? Now that is the power of dividend investing. One tip I can give you is when you're looking for a company to invest in, try looking for a company that's a dividend aristocrat. A dividend aristocrat company is a company that's increased dividends for the past 25 years or more consistently. If a company consecutively continues to raise its dividends, you know that the company is stable, but most importantly, you know that the company is growing. There are a few differences between dividend investing and investing for capital appreciation. When you invest in the stock market and have a goal of capital appreciation, you're going to want to buy and hold growth stocks, aka stocks that have high potential for growth. When your main goal of investing in the stock market is dividends, you're going to want to buy and hold stable, large, and reputable companies that have consistently increased their dividends and continue to pay you. These dividend companies won't grow in capital appreciation as fast, but they will consistently pay you dividends, which in the long term will bring you a lot of returns as well. The next question you may have is, okay, then how should I start investing in these stocks or ETFs? Well, it really depends on your situation. If you're young and have a lot of time on your side, dollar cost averaging into the market will be your best bet. Dollar cost averaging can be defined as investing into stocks and ETFs consistently, regardless of the price. Regardless of how the market is doing, you would invest the same amount every month consistently. Dollar cost averaging into the stock market is best for most investors, as no one really can time the market perfectly. Dollar cost averaging has been proven to work, and a lot of millionaires have been made through dollar cost averaging. Now, after all this information, you're gonna ask, okay, then what kind of stock should I buy? Personally, for me, I advocate index funds and exchange traded funds or ETFs. The main reason that ETFs and index funds are so attractive to me are that they give me a sense of diversification that individual stocks do not give. Historically, in the long term, index funds and ETFs have outperformed many individual stocks. Let me give you a real-world example. In the past year, the S&P 500 exchange traded fund VOO has returned around 28%. 28%. Comparing this ETF to an individual company like Netflix, Netflix has only grown around 15% in price over the last year. Now, I'm not going to deny that sometimes in the short term, individual stocks do outperform index funds and exchange traded funds. However, historically, long term, index funds and ETFs have outperformed a lot of individual stocks as these provide the most diversification and lowers your risk. These are the two strategies that I'll be using personally as well to invest in the stock market in the year 2022 and beyond. That's it for today's video, guys. Thank you so much for stopping by. If you're new here, my name is Paul and I create content on personal finance, entrepreneurship, investing, and personal growth. I really hope you learned something valuable today, and if you did, please feel free to smash the like button and subscribe for more future content, as I have a lot of videos planned for personal finance strategies and personal finance education. Remember, invest early and invest often, and you will set yourself up for a much more comfortable financial future. As always, your life is a masterpiece, so let's get it! Catch you in the next video. Take care. Peace!